Algorithmic trading involves the use of mathematical models and computer algorithms to make trading decisions in financial markets. By analyzing large datasets and historical market patterns, algorithmic trading aims to execute orders at optimal times and prices, often leveraging high-frequency trading techniques. High-frequency trading (HFT) involves the use of machine learning algorithms to analyze market data and execute trades at incredibly high speeds, often within microseconds. These algorithms use historical market data to identify patterns and make predictions, allowing HFT firms to exploit fleeting opportunities for profit. Pairs trading is a widely used strategy in financial markets that involves the simultaneous buying and selling of two related assets, such as two stocks from the same industry. Advanced machine learning models can be used to identify pairs of assets that have historically exhibited strong co-movements, and to predict the future price divergence between these assets. With the use of sentiment analysis and machine learning, stock prediction algorithms can analyze news articles, social media posts, and company reports to gauge public sentiment and predict stock movements. Dynamic portfolio optimization using reinforcement learning is a real-world example of using artificial intelligence to optimize investment strategies in a constantly changing market environment. By leveraging reinforcement learning algorithms, investors can dynamically adjust their portfolio holdings based on historical data and real-time market conditions, maximizing returns and minimizing risks. Algorithmic options trading with machine learning strategies involves using complex mathematical models to analyze market data and make trading decisions. For example, a hedge fund might use machine learning algorithms to predict stock price movements and determine the best options trading strategies. Order execution optimization using predictive modeling involves the use of historical order data and market variables to forecast the optimal timing and strategy for executing trades. Machine learning is revolutionizing risk management and fraud detection in trading by efficiently analyzing large volumes of data to identify patterns and anomalies. The conclusion of algorithmic trading with advanced machine learning is a promising one, as it offers the potential for more efficient and profitable trading strategies.